Hello, welcome back to my YouTube channel. Today I am going to analyze gold trading forecast analyze for your next week gold trading. So last week my gold weekly forecast I have told gold price reached above 2100 level, and that is the reached last week. So you can join it. My Telegram link is below. Accurate goal signals analysis and get the VIP access and get the profit from the trading gold. So this is the weekly can last week you can see that the gold made all time high, new high in last week. That the start price 2080 and the close price 2180. That's the last week bullish bias are mostly strong with the gold. That's the gold price increase $100 last week. So no retracement. Technically, traders are died dead in last week. So not retracements to the resistance levels, not reacted technical setups. So gold price increase $100 last week. This is the resistance level. You can see the 2080 is the strong resistance level, but gold price not reacted, not retracement from that level. And the 2100, I am going to the daily chart. You can see the next this is the resistance is strong level 2088 level technically, but price not reacted. This is the second retracement level, resistance level in 2150 level, but price has not reacted to that level. Also technically set up completely failed in last week. So bullish buyers are in control gold. This points not retracements price and continue to the upside $100 increase gold price and create new high in 2180 level. So that is what is the reason for gold price increase. I am going to the Forex live website that is mentioned what affects gold in 2022-24. So escalating geopolitical conflicts are causing gold to rise in value. There's a continuing geopolitical uncertainty, US election uncertainty, and market create the risk of sentiment. You know the risk of sentiment. Gold is the safe haven asset, safe haven commodity. Gold demand with the market uncertainty. So market uncertainty, geopolitical uncertainty is continuing. That is reason for gold demand to the upside. So I'm hoping 2200 level also reach next week. That is my forecast. So let's go to the Forex Factory website. So economic data not supported, not positive for dollar. That the combined with the uncertainty and geopolitical uncertainty, that's the demand goal. So last week labor data not positive, unemployment rate increased to 3.9% and the average hourly earnings dropped to 0.1% and non-farm employment change not positive. Economic labor data for dollar, that the sell off dollar depreciation dollar, that will help to gold demand also. That's the next week you will touch with this CPI data report, inflation report. That's the most volatile important economic event. 3.1%, 3.1% is the inflation report. That's the Fed expect to 3.1% also. So that's the next week important economic report is the inflation report USA. You will touch with that's the inflation report next week. So inflation report increase about 3.1%. That's the dollar demand and gold some retracement to the downside. So what is the technically analysis next week? Let's go to the technically what is going on. I am using Fibonacci, this movement, upside movement, what is the retracement level. I am hoping next week this point 0.786 level price will retracement to this point 2150 level, that is. And you can see the left side strong resistance is there. That resistance will support and again continue to the 2200 level. That is my forecast. So you have a buy opportunity goal again in this retracement points 2150.50 level, and again gold demand to the upside. I am hoping next week inflation report is the more important economic data. You should touch with the inflation report also. That's the 2150 level that you have a buy opportunity from that level gold trading. Then I am hoping 2200 is also break to the upside. That's the target is in. So that is the next week analysis. So gold is a safe haven asset. If you are trading gold, risk management is the key point, money management is the key point. So get the risk management, get the trade from the smaller time frame confirmations. Thank you very much.